everybody. Welcome to another episode of the Moving Markets Podcast. It is Friday, the 15th of March. The market has closed just recently, maybe in the last 15 minutes or so. Glad to have you here on a Friday. We got some fun stuff to talk about. Even though we ended on a down note, it feels to me like the stock market was more predictable this week and behaved more in the way you would have expected, considering the economic news that came out this week. Tuesday, of course, being the big exception to that. We're going to talk a little bit about that. I'm going to add a little bit to the commentary from yesterday. I'm not going to get off on the same political rant. I'm going to keep it a little less political, but add a little bit to the commentary. I know yesterday I went off. I went off politically like I don't normally do. I don't ever try and hide my personal politics, but I try not to insert them too much into what we do at Safe Option Strategies. And I meant what I said about, regardless of someone's politics, I want you to be profitable by following our system and our way of trading and even following the trades that we do. So some fun stuff to talk about. I'm glad you're here tuning in for today's episode. Make absolutely certain you go to sostrades.com, check out things there, like us, subscribe to our YouTube channel, make some comments or ask some questions. We so appreciate all of that stuff when you do it. And most of all, give some serious consideration to signing up for one of the packages we have so that you can participate in the trades that we send out to our members. We're over 35% return already for this calendar year, and that puts us so far ahead of the indexes and on such pace to have a phenomenal, maybe record-breaking year this year, regardless of the direction the market moves. That's one of the most fantastic things about the way we trade is we'll show you how to make money and let you follow our trades and make money regardless of what happens in the market. So take a minute to check us out at sostrades.com. And once again, thank you for joining us and listening to this podcast. Please enjoy the podcast. Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is March the 15th, 2024. Friday, of course. The U.S. stock market closed about 20 minutes ago, and kind of a bumpy ride and kind of a down week. But I'm gonna take some time today to tell you a little bit about the optimism that I see and try and put not a spin, but kind of show you what I think the silver lining is behind the second week in a row of the markets, the S&P selling off a little bit. There's nothing real specific to report for the Safe Option Strategies members only. I will say that I'm pleased with everything we have going on with our open trades. I think they're right where we truly need and want them to be. We gave up a little bit of ground today on Nvidia and on Amazon, and sadly the option prices became a little bit weird for AMD. AMD was up today. In fact, it was up pretty strong and in a pretty nice way. But in spite of being up like that, the option prices got a little funky right at the end of the day. And so it shows kind of an ugly loss on AMD that in all honesty is a fluke. We're still positioned very, very well on this. For this to show, almost 16% down is kind of screwball. So I'm not worried about it. I guess that's my way of saying don't sweat it at all. Don't worry about it in any way, shape, or form. And then collar trades are looking good. We're gonna be making some more aggressive adjustments to some of the collar trades that have options expiring at the end of next week or the following week, the 22nd or the 28th. So let's talk about what the markets did today, kind of wrap up what they did this week. I'm going to offer a little bit of additional commentary on the rant that I went on yesterday, but it's not going to be a rant. I promise I'm not going to turn it into a political rant and tell anyone to pull their heads out and vote the way I think you should vote. I won't. Everything I said everything I said yesterday was true in the sense of how I feel. It was my opinion. I realize some of you may not agree with it. Some of you do agree with it and have already commented and told me such. But I'm going to add a little bit to it and clarify a little bit and do it in a less passionate, less political way. And it's not an attempt to appease anyone. I just want to make sure people understand where I'm at with this and why I think it's such an important thing to be considered when you're voting, and when you're voting for purposes of the economy as the number one thing. So as you can see, if you're watching instead of just listening, the Dow Jones down 190 points today. That's about 0.5%. The S&P a little bit more than 0.5%, down 33.39. And the NASDAQ down almost 1%, down 155 and some change. Now, before, the obvious is that if you look at a chart of any one of these three major indexes, it is the second week in a row that they're down a little bit. It's not down in a dramatic way. The Dow Jones for the last 2 weeks, quite honestly, looks very, very flat, and the 20-day moving average is almost as flat as you can get it. Volume was really, really high today. I don't know that needs to be a concern. I think that has more to do with the weekend than anything else, and a couple of big name stocks on the Dow that maybe sold off a little bit heavier. The S&P 500, the chart doesn't look identical, but it definitely looks similar. And it is the second week in a row from where it started. It finished down ever so fractionally, and it's not, again, a massive sell-off by any stretch. Not nearly the volume on the S&P today relative to the Dow, but still, a couple of weeks in a row. I think the first 2 weeks in a row of downward movement this calendar year. And then, of course, the NASDAQ, maybe a little bit bigger percentage down these last couple of days than the other indexes. Again, 2 weeks in a row now that the NASDAQ is trading a little bit lower than where it opened the week. But we have not technically crossed over on the RSI or the 5 and 20-day moving averages. So I hope no one is pushing any panic buttons or severely alarmed. And here's what I want to give you as the silver lining on these moves down in the three major indexes. Some of it obviously is on the inflation fears. This was a more easy week to predict, with the exception of Tuesday. I'm still scratching my head about Tuesday's movement to the upside and how the markets were able to react in that way, how the indexes were able to react in that way in the face of what was a kind of a lousy CPI report. Yesterday, the PPI report was a little bit worse, and I told you earlier in the week that producer price index is oftentimes followed by consumer price index, even though they're reported in the opposite direction. What is happening with producer pricing right now will show up in the consumer pricing a month or two later on. Because when companies that manufacture goods or companies that provide service are hit with higher costs, which is essentially what the PPI is saying, they, in most cases, are going to pass along at least a portion of that. And sometimes they pass on the entire thing to the consumer. So that's why the consumer pricing index that you see this month is more a reflection of what happened with producer pricing last month or the month before. So that alone is probably one of the bigger reasons why there was more, for lack of a better way to say it, a more rational movement to the downside on the PPI data Thursday morning versus what I still believe was a somewhat irrational move to the upside on the CPI data on Monday morning, or excuse me, Tuesday morning. Added to all of that is that consumer sentiment, even though it was by a fractional amount, consumer sentiment dropped a little bit this month from last month, and it dropped a little bit last month from the month before. And even though it's still at respectable levels, the fact that consumer sentiment is dropping is telling you a couple of things. More people are waking up to the idea of inflation lasting for a much longer time, or stagflation like we got in the late 70s. The markets and the economy are starting to look more and more like it did for Jimmy Carter in the late 70s. And the reality is that no matter what the spin is that's put out by the White House and by the mainstream media, people are not feeling as good about Bidenomics as what they're trying to make you feel. It kills me when the media, comes out, and everyone does this. All of the liberal media does this. They come out and they say things like, the economy is doing so much better that people just don't understand it, and that's why they're still giving low approval ratings and disapproving of the economy.
And I want to say to these people, no, that's not the case at all. People are smart and people see what's going on and people feel what's going on, and you elitist snobs in the media who have much higher paying jobs than the average American family, and who live in a complete and total bubble, prison of your own ideas and the echo chamber that you live in. You're not feeling the pinch of it because of your affluence and your wealth. And that makes your head bigger and makes your ego bigger and makes you more elitist and makes you more out of touch with the average American family out there that is dealing with these numbers. The inflation right now sucks. Since Joe Biden became president, prices across the board on everything, food, gasoline, rent, homes, other transportation costs, insurance, household goods, beyond the grocery and the perishable items, the higher price, higher ticket items. Everything costs more by an average of about 21%. And the most recent economic readings are suggesting that could go a little bit higher, not lower, in the upcoming 1 or 2 months. There's also a reality setting in that the Fed is less likely to have any rate cuts in the first half of this year, which means we're put May and June. March is already out of the question. There's not going to be a rate decrease next week when the Fed meets. I'll be absolutely stunned if there is. But you ought to put May and June out of your mind as well, because more and more people are getting on board with this notion that there will not be a rate cut in the first half of this year. Any rate cuts, if there are any, in the second half of this year are going to reek of politics. And so I've mentioned a number of times that the Fed has very much painted themselves into a corner. So in spite of that, let me give you, I told you I'd give you some silver lining. And in spite of that, here's what I believe the silver lining is. No matter what the reasons and the causes for it all are, this run up in the indexes that we've had since the end of October, first part of November, this is a big rally, a big bullish run for the last 4.5 months now, and a healthy 10% correction, or maybe even a little bit more than 10%, I believe would be a very, very good thing for the U.S. markets right now. In fact, I think it would be the most healthy thing going into second quarter and into third quarter of this year if we did have a 10% pullback. I hope, if that's what happens, that it takes place over the next month and a half, and the turnaround we see is maybe in the early part of May or the late part of April. Maybe earnings are good enough in the middle part of April that even a 1 month drag on the markets down about 10%, that would feel like a lot in 1 month. But even if that were to be the case, and it was earnings news that turned things around and got things back on the right track, I think that would be a good, healthy thing for the market. I still believe there is at least a possibility that we go into a much deeper decline in these markets. I will not be surprised if before this calendar year is over, we see a 15 to 20, maybe 20+% drop in the three major indexes, because I think the economic headwinds are getting a little more severe than not. But in the shorter run, I think a 10% correction would be a fantastic reset and be a good thing for these markets. Even if this downward movement, these 2 weeks in a row that have happened right now, even if it ends up being a third and a fourth and a fifth week in a row, and we do find ourselves crossing over technically on the three major indexes, and we find ourselves in a technically corrected market, I think that would be such a healthy thing and give us a better opportunity of having a strong finish to the second quarter and maybe a flat to overall bullish year on the year. Whereas right now, I'm thinking there's a possibility that we see this market give up a lot of what it's gained since November and maybe be in a technically bearish market before the end of the year. So I'm going to try and stay optimistic and say it's not going to be anything more than a 10% correction, but a 10% correction would be a good thing and a positive thing. Now, I'm going to add a little bit. Yesterday, I went on a pretty heavy political rant about the what I see as the sometimes idiocy of people who cannot or will not disconnect their emotions about an individual or a political candidate from the policies that would better serve them. And it is frustrating for me. Now, I'm sure there are some people on the other side of the political aisle that would say exactly the same thing about conservatives and Republicans, but facts are a stubborn thing. And if you objectively looked at the facts, you cannot blame anything that took place in the previous administration for the super high inflation and the out of control government spending and the ridiculous debt that we're racking up as a company. You cannot blame that on the previous administration. You cannot blame the turmoil around the world, the stuff going on with Iran and its sponsor of terrorism, wherever it can do that, the stuff going on in Haiti currently, the stuff going on in Israel, the situations, the hot spots. China is the biggest. To me, China is still the biggest threat and the biggest worry. But you cannot objectively blame any of that on the previous administration if you just look at the facts and put aside the emotion. The state we're in around the world, the state we're in this country, I forgot to mention one of the biggest security threats, which is our southern border. These are directly 100% the result of bad political policy by the current administration. Now, let me put a little bit of a softer touch on this and give you just a little bit of an explanation of why I got so passionate about this yesterday. I know there are many people on the liberal and the Democrat side of the aisle that absolutely abhor and detest Donald Trump in every way imaginable. They really truly believe he is Satan. They believe that he is a modern day Hitler, and they'll say that and they'll believe it and they'll mean it. And if they feel that way, there is little or nothing you can do to change their mind about that, in spite of the fact that policy-wise, we were better off under his administration than we have been these last 2.5 years. The challenge is people that are so just viciously against this man are simply not capable of looking past that to the actual policies and are not able to say if this was any other individual in the Republican Party who I could stomach, or if this were anyone with a D behind their name, I would be able to say without hesitation the policies that we had in place, economically specifically. I know you're all hung up on abortion, and I'm not going to go there. I have some strong feelings about that, but with that one exception, you just don't have the facts on your side when you're looking at things from a policy standpoint. Now, here I had to think back a little bit, and I had to think back specifically about how I felt in the 1990s with Bill Clinton, because I think that's what a lot of liberals and a lot of Democrats are going through right now with Donald Trump, but to a much, much more severe degree. Look, if you're an objective individual, if you can take the emotion out of things, even temporarily, you have to admit that Bill Clinton in his personal life was a sleazeball. There is so much evidence, unless you just choose to be ignorant. There is so much evidence. The affair with Monica Lewinsky is honestly the only one that you even have to consider and look at to see what a sleazeball he was. The man was in his late 40s and having an affair with a White House intern that was barely over 20 years old. And that is disgusting and sleazy, whether she is technically an adult or not. Folks, any of you that have children that are in their late teens or early 20s, you know they are still children. They are still kids. And if you, I promise you, If you had a daughter that was 20 or 21 years old, and her boss, who was in his late 40s, was having an affair with her, you would want that individual strung up. You would want to see them 6 feet under, or at the very minimum, you would want to see them behind bars for doing such a despicable, such a disgusting thing. Whether your daughter was complicit or not, you cannot tell me logically that you wouldn't think he was an absolute disgusting creep. Think about this also. If he were not the president of the United States, who was so protected by half the elected representatives in the government and was completely protected by 90% of the mainstream media, if he had been any other executive in a private company instead of the elected president of the United States, no matter how much you thought highly of his ability to run the company, no matter how well you thought he made policy and set the tone for a successful company, you would have thought he was a sleazeball and deserved to be removed immediately as the CEO of that company. And you're lying to yourself and you're lying to anyone if you don't agree with that. You're being intellectually dishonest, because it's a simple fact. Now, during his presidency, in spite of the fact that I thought he was personally a sleazeball, I had the ability to set those emotions and those feelings aside. And I can look back now, and I know I felt this way at the time. A lot of his policy decisions I thought were good. The country thrived during the 8 years that Bill Clinton was president. Bill Clinton made some phenomenal political moves on economic policy, on budgets. I don't agree with everything he did, but he made some great moves on his international policy. And there's a couple of small exceptions. But generally speaking, I thought he was a proficient and at times a good statesman and representative as a whole for this country. I think he was a scumbag in his personal life, but I think more of the decisions that he made for the country were good. I don't even stop to think about what his motivation was. Even if his motivation was purely about what will give me the greatest chance to get reelected, guess what? Every politician does that. Republicans, Democrats, Libertarians, Independents, they all do that. They all make decisions based on political expediency first, and their constituents second. And if it's good policy that is helpful to the majority of the people in the country, I don't care what their ultimate motivation was, and neither should you. Look, Bill Clinton, love him or hate him in his personal life, whether you agree with me and think he was an absolute disgusting pedophile sleazeball in his personal life, if you're objective and you can set aside the emotion of that, you can look at the policies and say, you know what? For the most part, there can be exceptions here or there, but for the most part, his political policies were good for the country and good for the majority of the citizens of this country. There are always going to be some people that disagree, but I think you don't have the facts on your side unless you're willing to say that his economic policies in general and a lot of his other policies were better for the country than not. But I'm telling you today, the way things have become in this country, and then look, let me back up and say one last thing along those lines. I think there are a lot of strong conservatives and strong Republicans who can objectively set aside their emotion and say, you know what, you're right. His policies, the decisions he made in governing, were generally better for the country or not than not. But I don't think you could find in total 10% of registered Democrats or even if they're not registered as Democrats, liberal independents who would be willing to say that same thing about Trump. The notion of Trump derangement syndrome is real, it is pervasive, and it clouds people's ability to look at policy, and to look at what would be the better things for the country as a whole if I can just get past my emotional feelings about this individual's personality. So look, that's I just wanted to. I tried not to make it. I probably didn't succeed 100%, but I tried not to make it as much of a political rant as I did yesterday. I wanted to be a little more rational and kind of give you that example, and help you understand why, in spite of some things that I don't like about the man, if the choice is on the second Tuesday or the first Tuesday of November, if the choice is Donald Trump or Joe Biden, I don't have a split second of hesitation pulling the lever in that voting booth for Donald Trump. Way more because of his governing decisions and his policy than because I think he is some shining beacon of altruistic morality in his personal life. I'm not that naive. I'm not that stupid. But I would like to believe that I am logical enough that I can see that his policies and his governing would simply be better for the country as a whole, especially when it comes to economics and when it comes to national security. So that's as much as I'm going to say on that. Let me end by talking really quickly about next week. Next week, we've got the Fed meeting on Tuesday and Wednesday. They're going to announce on Wednesday, I guarantee you, they're going to announce on Wednesday that there will not be a rate cut. But watch for what Jerome Powell says. I believe there is going to be some comment about a first half of the year rate cut being off the table, or at least he's going to strongly imply that. And I'm not sure if that's fully baked into the markets yet. I think if Powell is pushed, and I think he will be by a number of different people are going to be lined up to ask this question. I think if he is pushed to definitively say whether or not there will be a rate cut in one of the next two meetings, which would be the May or the June meeting, if he's being honest, I think he's going to say it is very unlikely. Now, he can try to be ambiguous and say, we just don't know yet. The data will tell us. But I don't think that is what he or any of the other Fed govs believe. I think they're looking at these last two CPI and PPI readings, the last PCE reading, and I think they're taking that into account. And I think they already know that the likelihood of a rate cut in the first half of this year is pretty much a gone deal. And that puts them in such a tough position about what they do, looking blatantly political if there's a July or a September rate cut. I am becoming more and more in favor of no rate cut for this year, and let the markets correct the way they're going to, and let us get out of this economic situation that we are in with less taxes and more growth instead of more taxes and more government spending. That's my take on that. And my expectation is next week is going to be the third week in a row that we're down, because I don't think the markets are going to like what Powell says on Wednesday. We'll see by this time next week if I'm right or I'm wrong in that. Everybody have a great weekend. Thanks again for tuning into the podcast each and every day that you do. Tell your friends about it. Give us a like. Subscribe to our YouTube channel. Get the word out there. And send us a comment or send us a question on what you heard today. Thanks again. Once again, have a great weekend. Bye-bye.